Bitfarms is the most efficient Bitcoin miner on the stock market right now. So when you take a look at Hive, CleanSpark, BitDigital, Mara, Riot, Bitfarms is more efficient in mining Bitcoin than all of those companies. So what I'll do in this video is I'll go over some institutional buying that we've seen from BlackRock and other firms. I'll go over the Wall Street analyst ratings. I'll go over financials. And at the end of the video, I will give you a price prediction for this stock. So with that being said, let's talk about it here. So yes, this company is very, very energy efficient. So they use energy efficiently. They mine Bitcoin efficiently as well. So most miners use proprietary software to optimize the performance of their mining machines. Bitfarm is no exception, and the Bitfarm software would appear to be a source of substantial competitive advantage. Their proprietary software has made Bitfarms the most efficient miner this year. So their proprietary software is a huge differentiator for this company. And then from a high level, if you don't know much about this company has 11 operational farms, 2 farms in development, and they mine about 13 Bitcoin a day. And then what large investment firms are buying this company, may you ask? Well, State Street increased their exposure by roughly 2% over the past quarter. We saw some active hedge funds buy the stock as well. So Millennium Management, a large active hedge fund, increased exposure by about 60%. Also, we saw Citadel increase exposure by over 300% over the past quarter, and we saw Morgan Stanley increase exposure by almost 4x. So it's good to see that the large hedge funds are buying more of the stock, and even some of the passive indexers such as BlackRock have bought more of the stock. So we saw BlackRock increase their holdings by about 100% over the past quarter. Definitely good to see that one of the largest asset managers in the world are buying more of the stock. So overall, investment firms are bullish on the stock, and it shows in their most recent trading activity. And then let's take a look at the Wall Street analyst ratings for this stock. So we can see here that there are 2 firms that are covering this stock, and they're both bullish. So Canaccord Fitzgerald actually reiterated their buy or their overweight rating on this stock with a $2 price target just today. So good to see that there. And then HC Wainwright maintain their buy rating and move their price target from $3 to $4, and that was just last week. So the 2 firms that cover this stock in the stock market are quite bullish on Bitfarms. And then with that being said, let's take a look at the financials for this company. So right now we have a price to cash flow of about 12, and we have a price to book ratio of 1.6. For those that don't know, that basically puts the market cap relative to the book value of a company, book value just being the assets that it has on its balance sheet. So 1.6 basically tells you that the market cap is 1.6 times the book value of this company. And the 5-year average of price to book ratio for this company was actually 4.4. So we're trading at a discount relative to the company's own history in terms of price to book ratio, in terms of the price relative to the assets on its balance sheet. So 1.6, pretty cheap there in terms of price to book. Obviously, we don't have a positive PE. And then in terms of growth, so we saw revenue growth drop 27% over the past 12 months, but we're expected to see revenue jump 11% over the next 12 months. So good to see that growth picture is kind of turning around. And then in terms of profitability here, so we have a gross profit margin of minus 27%. So this company is still losing money, obviously. And then net income margin of minus 49%. So on a profitability basis, the company doesn't look great. But then if we take a look at this company's balance sheet, we can see that they have roughly $50 million in cash on hand, and they only have $26 million in debt. So that tells you that they have $20 million more cash than debt. So really no debt here, which is awesome to see for this company. They have a positive net operating cash flow as well, which leads me to believe that the company does have significant capital on hand and can fund its future operations. So that is very important to see. And then let's take a look at this recent investor relations presentation where they tout their efficient mining equipment. So they have this mining equipment from Bitmain, which is a Chinese Bitcoin mining company, or they don't mine Bitcoin, but they make the machines. And then this is very energy efficient and set up to perform well in the halving in 2024. And then this is the most energy dense air cooled Bitcoin miner. This is the most powerful air cooled Bitcoin miner and the most cost effective upgrade option. So they have their mining machines are very, very solid. And then we can see kind of where their fleet is located. You can see that breakdown here: Canada, Paraguay, Argentina, and the U.S. And we can kind of see how the efficiency will move along. So where we will be around at halving, you can see those numbers there, and then they do get better as we move along. So good to see that there. And then the company also has 760 Bitcoin held as of 10/31 this year, which is only $26 million. And then they're seeing improved margins as well. So they're improving the average fleet efficiency of around 30%, resulting in a direct cost to Bitcoin being lowered and higher mining margins. And then we can see the projected market share amongst the top five. So we can see Marathon being number one, Riot being number two, CleanSpark being number three, and then Bitfarms coming in after that. And then some key highlights. So the high efficiency, as I talked about, the company feels as if they're having ready, they're flexible, and their fleet provides upside, and they're capital efficient. So this is all really good to see for Bitfarms here. And then with that being said, let's take a look at the chart here and give a price prediction based on technical analysis. So obviously the company's been on a tear over the past couple trading days, right? It's been a pretty intense move. Therefore, as the company is overbought according to RSI, I believe we could see somewhat of a short-term pullback for this company, and I really think that that's going to be a short-term pullback within a larger uptrend. So I think we could come back down to support at about $1.50. I call this level support as this is where shares had topped out in late August. This is also where we saw some topping out in mid-September. Therefore, I believe we see a move lower down to support at about $1.50 for Bitfarms. And then I think we will likely bounce off that level and see a move higher up to, about $2.70. This is really just the next major level of resistance for this stock. So I think it is likely that we could see a move back down to support and then a move higher up to resistance at around $2.80 for this stock. So that's what I'm seeing from the technicals. With that being said, covered a lot in today's video. Would appreciate if you left a like and subscribe. I do these breakdowns all the time. In fact, I did a recent breakdown comparing Mara and Riot, and I will link that video to the end of this video. So with that being said, I hope you enjoyed this video. I'll see you here next time.